During this lecture, I'm going to be teaching you everything you need to know about institutional order flow and how to align yourself with high-frequency trading algorithms in the markets. Buckle up because this lecture is going to be a good one. Let us dive into today's lecture. How to align yourself with HFT algos in the markets. The truth behind institutional order flow. When it comes to HFT algos, it's important to know that this is a topic which isn't commonly discussed within the trading space, and the reason why is because they don't want this topic to be discussed. However, during this lecture I'm going to be giving you insights on how to recognize true institutional order flow. When it comes to defining institutional order flow, IOF, is either bullish or bearish. This means that price is either in a buy program or a sell program. Your job is to recognize what program price is currently in. If you are unable to define what program price is currently in, you're literally gambling on the markets, and the reason why is because you're chasing price. What I would like you to understand is that your job is always to define what is the current program that price is in. Once you recognize what this program is in, that is when you can align yourself with these high-frequency trading algorithms. I promise that by the end of this lecture, you will have gotten a good understanding of how to recognize what the true institutional order flow is and how to recognize where true opportunities are being presented. When it comes to recognizing institutional order flow, there are two ways of recognizing institutional order flow, which I want you to start paying attention to. There are many other ways to also start paying attention to recognizing institutional order flow. However, for this lecture, I've chosen two of the most important methods that we're going to discuss. First of all, we're going to be discussing time cycles, PXH and PXL. Secondly, we're going to be discussing PD arrays and how to use them accordingly to define institutional order flow. Now, if you're unfamiliar yet with the time cycles, I highly suggest you to go on my YouTube channel and check out my lectures in the past on the topic. When it comes to bullish institutional order flow, there are two ways that we can recognize bullish institutional order flow by paying attention to time cycles. First of all, we're going to be paying attention to a previous cycle low, purge and revert. What this looks like visually is the following, where we see a new time cycle open up, drop lower, taking out a previous cycle low, that is shown by this red line right here. And what happens there is that sales liquidity resting below the previous cycle low gets taken out. As this sales liquidity is being taken out, what we'll be looking for is the signs of a reversal to take place. When these signs are in fact in play, what we can be anticipating is that the market is likely going to revert towards the opposing side of liquidity. This opposing side of liquidity is resting above the previous cycle high. This is buy side liquidity. This is a bullish purge and revert, and this takes place in bullish environments. Secondly, what we can be paying attention to is a previous cycle high to function as support on price. So as a new time cycle opens up and takes out the previous cycle high, what we must see taking place for the order flow to remain bullish is we must see that previous cycle high function as support on price as the market retraces into that high. If the market retraces into this high, we must see a low formation taking place inside of that previous cycle high to continue the bullish order flow. When we pay attention to PD arrays then, what I would like you to understand is that the moment that premium arrays get displaced through, we anticipate them to function as support on price. Every single premium array that gets displaced through and we see the market displace above it gets treated as an inversion array. So what this means is that the premium arrays which formed on the left side of the curve can be utilized on the right side of the curve as discount arrays, as potential support areas, if you would like to think in those terms. When it comes to what happens in bullish order flow, it's also important to note that discount arrays will get created and will function as support on price. So what you can see is that we can both blend the time cycles with the PD arrays to gauge the order flow. When it comes to bearish institutional order flow then, what I would like you to understand is that it's either a previous cycle high, purge and revert, which looks like the following, where we see the market open up for a new time cycle, we see a run higher taking place, taking out a previous cycle high, and as this previous cycle high is being taken out, we'll be looking for the signs of a reversal to take place. When these signs of reversal are taking place, we can anticipate that the market is likely going to draw towards the opposing side of liquidity. We just took out buy side liquidity resting above the previous cycle high, so now we can logically anticipate that the market is likely going to revert towards sell side liquidity resting below the previous cycle low. When we eventually take out the previous cycle low, what we must see is that the previous cycle low will function as resistance on price in order for the order flow to remain bearish. So as a new time cycle opens up and drops below that previous cycle low, we'll be looking for a retracement higher to occur. And as that retracement higher occurs, we must see that previous cycle low function as resistance on price in order for the order flow to remain bearish. When we pay attention to the use of PD arrays tend to gouge the order flow, we pay attention to discount arrays getting displaced through, and we anticipate them to function as resistance on price. Again, we treat these discount arrays as inversion arrays once they get displaced through. And the reason why we pay attention to these discount arrays on the right side of the curve is because these discount arrays should have functioned as support on price if the order flow would remain bullish. However, the fact that they are being displaced through is IBDA signaling to you, hey, the underlying order flow is beginning to change. Therefore, we can utilize every single discount array as an inversion array on the right side of the curve. And thirdly, premium arrays will get created and they will function as resistance on price. And that right there is how we can incorporate PD arrays to gouge the order flow in bearish institutional order flow. Now, I understand that what I've just outlined might already be too advanced for you. And I understand that you might be looking at this and you might be thinking to yourself, okay, this is quite a lot to look at. However, we are going to be paying attention to charts, and inside of the charts, I'm going to be showing to you how you're able to recognize what the time cycles are signaling to you, and secondly, what the PD arrays are signaling to you. And based upon the blending of those two elements, we're able to clearly see, hey, this is what the true underlying institutional order flow is, and this is what high frequency trading algorithms are currently programmed to do. And what's important to note when it comes to these HFT algos is that they are delivering price in specific cycles. So what it means is that if price is in a bullish price cycle, what will happen is that IBDA will literally spool towards all the key levels and will literally just reprice through them. When the institutional order flow is bearish, what IBDA will do is that it will spool through every single key level towards the downside. And understand that my hand gestures might not make a lot of sense to you right now, but I promise when you start investigating this within the charts and you start to understand, hey, there are specific price cycles in play all the time, and your job is to recognize what program price is currently in, what I've just outlined will make a lot of sense to you. So let us pay attention to an example of bullish institutional order flow. Here on the RV chart of NASDAQ, and what we can see is that I have put on the past week's delivery on NASDAQ. Last week I released a lecture on time, and the lecture on time was a pretty advanced lecture, and I was very happy to see that many of you really enjoyed the lecture and that you also begin implementing and looking for these algorithmic signatures which I had outlined during that lecture. And when we pay attention to the delivery which occurred throughout this past week, what we can see is that NASDAQ repriced towards the upside very heavily. And I know that many traders are caught off guard by this run higher because they weren't expecting it. They weren't looking for higher prices. Why not? Because the media was inducing fear into the world. And exactly because the media was inducing fear into the world due to situations taking place in the Middle East, that's exactly why the market was being repriced towards the upside. They manipulated heavily throughout the beginning of the week so that then distribution higher could occur. Now, what I will be doing is I will be walking you through this whole week's delivery, and I'm going to be showing to you how I was able every single day to look for one thing, and that was open, low, expansion higher. Open, low, expansion higher. When we pay attention to, first of all, what happened since the beginning of the week, what I would like to see is that we open up for the week right here. That gets shown by this indicator right here, which spots the weekly open. Notice that we opened up and immediately took out the previous week's low right here. Do you see how we traded into the yearly open, formed the low, and the market then rejected that level and immediately began repricing towards the upside? what you can see is that I've outlined a very specific hourly BC right here. Notice that we displaced at first below that hourly BC. So what you must understand is that there are two key elements which I'm going to outline to you here. First of all, we displaced below that hourly BC. So if the underlying order flow would remain bearish, that hourly BC should function as resistance on price. The reason why this hourly BC is so important is due to the following. What I would like you to understand is that when we opened up for the week, the market was trading below that hourly BC. If the underlying order flow would be bearish for the upcoming week, that hourly BC should function as resistance on price. However, what you can see is that we displaced above it. So that right there is a key sign that the underlying order flow might be changing from bearish to bullish. That we might be changing from sell to buy program. But next to that, what I would like you to understand is that when we pay attention to a weekly cycle, every single new week that we open up, we have two reference points which we can pay attention to. What those reference points are the previous week's high and the previous week's low. And what I've just outlined to you within my schematics was the following. If we take out the previous week's low, that low should function as resistance on price if the underlying order flow would remain bearish. However, what you can see is that we rejected that previous week's low and then displaced above that REBC, which I have outlined right here. Therefore, the moment that that occurs, bullish order flow is confirmed for the week to come. So what my eye immediately is drawn towards is, okay, where is the previous week's high engineered? And what you can see is that the previous week's high is up here. Do you see how smooth these highs right here are? There's a very clear engineering of bias liquidity which is taking place. Do you see how you have these clear relatively equal highs right here? Retail views that as strong resistance. However, I'm looking at that as, hey, this is buy side liquidity which is literally engineered to be made jacked in the future. When will it be made jacked? When we see that purchase and refer taking place of the previous week's low. We see the market displace above that same REBC. And do you see how the market retraced into that REBC, expanded away from it? Retraced one more time, and do you see how we just wicked below it, but notice that the bodies keep on closing inside of that REBC. I'm going to be sharing some insights on the importance of bodies as well later during this lecture. But for now, I'm going to just walk you through this delivery right here. What I would like to see is that the bodies kept on closing inside of that REBC. And because that is the case, that's signaling to me, hey, an expansion higher is likely going to come soon. Why? Because based upon the time cycles, I'm seeing a previous weekly low purchase and referred. And secondly, I'm looking at these key arrays and I'm recognizing, hey, their function is beginning to change. Where at first this BC should have been utilized as resistance on price to go lower, what we can see is that we displaced above it and therefore we can anticipate it to function as support on price. Notice that the market expands towards the upside and notice that we see an expansion taking place above these relative equal highs. Notice that these relative equal highs, however, formed inside of this RECB, this bearish for value gap, which formed right in advance of the previous week's high. Do you see that we displace through that bearish for value gap with the creation of a bullish for value gap right here? We see the market take out the previous week's high. And what did I outline to you? What I outlined to you is that the moment that we take out a previous cycle high, in order for the underlying order flow to remain bullish, what we must see is we must see that previous week's high function as support on price. Do you see how we retraced into that bullish or value gap which got created right here? But do you see how the bodies keep on closing at that previous week's high price level? Eventually we see the market expand towards the upside and we see this REBC get created. Why is this REBC so important, you might be wondering? Well, what I would like to see is that what I've done for this whole week is I've outlined from Monday all the way till Thursday every single daily high with these green lines. Do you see how we displaced through that previous day high, that Monday high, with this bullish for value gap? Do you see how the market consolidated inside of that bullish for value gap, inside of that previous day high for a long time? What's happening inside of that consolidation is that high frequency trading algorithms are being provided the opportunity to fulfill their long orders around the specific average order price. Therefore, what I want you to see is that consolidation is a distortion in time taking place. What's happening right there is that the market is being held inside of a very tight range. And what's happening there is that the market is simply going back and forth, back and forth, back and forth until the time is right for that next expansion leg to occur. What you see is that the market expands towards the upside and we form the daily high of Tuesday. Notice that consolidation occurs and we see the market reprice eventually throughout the beginning of Wednesday towards the upside. Notice that a retracement lower occurs and we take out sales that liquidity engineered below these lows. Notice that the market traded below the Tuesday high, but notice that the market quickly displays back above it again, creating this RBC. We see the market reprice towards the upside once again. And do you see how on Thursday we spend some time above the previous day high? And do you see how the bodies keep on closing around that specific price level? What's that signaling to me is the following. What it is signaling is, hey, we're engineering more buy-side liquidity above that previous day high, which we're going to be looking for to be made jacked later. So what you're seeing is the whole time expansion higher, retracement lower. Expansion higher, retracement lower, expansion higher, retracement lower, expansion higher, etc. Until the higher time frame objective gets met. That is the same cycle which repeats itself again and again and again. Notice that we eventually form the high of Thursday right here after the market expanded away from that Wednesday high. And we see the market displays above that Thursday high. What do you notice? Again, a bullish value gap displays us through that Thursday high. On Friday, we see a retracement taking place into that bullish value gap, and we see the market have one more push towards the upside before forming the weekly high and eventually retracing lower. Now, what I hope that you're beginning to see is that what I keep on referring to is literally what is happening relative to the previous XH, and in this case, the previous day high, because we're paying attention to an hourly chart. But what the beauty is of the concept which I'm outlining to you is that they're all fractal. Meaning I use this same logic on a 1 minute time frame or on a 15-second time frame when I'm trading NASDAQ intraday. And that is something which I'm going to showcase to you as well later during this lecture. However, when it comes to what I've outlined to you right here, you might be looking at this and you might be thinking to yourself, you know what? Everyone is a genius in hindsight. Everyone can go to a chart and outline this and that and whatever. From the moment that we open up this week, I outlined to my mentorship students, okay, I see the signs of a potential weekly low being in the making. Literally from the Sunday open, we open up, dropped lower, and that was manipulation taking place. And that is where smart money tipped the hand to me. And if you pay attention to intermarket ratio between NASDAQ, ES, and the Dow Jones, you'll be able to see that. So the main difference between everything which I'm outlining publicly for free here is that I'm explaining to you why I was doing what I was doing throughout the week and throughout the days. That right there is because I want to make an impact on your journey. And when I read the messages and I see all of the tags that take place across social media where people tag me in their executions, in their trades, etc. And they just thank me for example, what I released last week with regards to time. It's truly amazing. And it truly also is to me a sign of, okay, I'm making an impact and I'm very grateful for all of that support. So I really appreciate that. And what's nice about that is the following. It's nice to see that what I'm seeing within these charts is transferable knowledge. Meaning there are thousands of individuals that study my lectures and they're able to see what I see. Because once you see this, you will never be able to unsee it. It's that light bulb moment which has to take place where you're able to see this is what they keep on doing all the time. And it's the rigged world. It is. And all that has to be done is you need to be able to recognize what is the program that's priced currently in, whether it be buy program or sell program. And I hope that so far in this lecture, you've already experienced major light bulb moments that are like these little gems which are beginning to internalize and say, aha, that is how I can look at the charts. And the thing is, I also know that a lot of people will have already clicked away from this lecture because they're like, this guy is explaining everything too slow. He's probably not going about the things in the right order or whatsoever, or this is too simplistic. Honestly, it's hilarious to look at the statistics of any particular lecture which I upload. You'd be surprised how few people actually watch these lectures till the end. And then those are the same people that will eventually come out and they will say, trading doesn't work and this and that, because they literally expect to just open up a lecture, watch it for 5 minutes, watch it for 10 minutes, treat it as if it's the next Netflix series. Okay, let's watch 2 serious videos all in one night, get some popcorn out there, and boom, there we go. If you have that mindset, I'm sorry to tell you, but you're never gonna make it. And the reason why is because you're unable to be patient and you're unable to put in the work yourself. At the end of the day, I'm not going to be holding your hand. I don't provide any signals. I don't tell you where to buy or sell. I don't tell you, okay, this is the trade set which I'm about to engage in. No. All I'm doing is I'm sharing with you, okay, this is what I'm looking for all the time. And I know this stuff works. And I have thousands of students that are literally showing every single week that this stuff works. Even this week, in this whole expansion higher, the amount of times that I took a particular trade and that so many students of mine, whether it be private mentorship students or public students, took the exact same trade as me and participated in the self move is ridiculous. Because if you have watched my previous lecture on time, in which I literally explained all that you need to know about time to begin anticipating when certain market moves take place, and you look at this delivery and you investigate in great detail on the 1 minute time frame what happens throughout the days here, you're going to be smiling and you're going to be thinking to yourself, damn. And honestly, I wish I can go back in time and experience and relive those moments of joy again, where it's like you're beginning to see something that you know you shouldn't know, and you're beginning to see it repeat every single week. And once you start doing the math on that, you begin to realize, wait a minute, you don't need to do a lot each week to replace your current income. And once you come to that realization, man, oh man, the sky is the limit. And to be fair, the sky isn't even the limit. There are no limits. The only limits that exist are the limits which you put on yourself with your own minds. But let us take a look at bullish institutional order flow from a deeper look. The wicks do the damage, the bodies tell the story. What I would like you to see right here is that what I've done is I've removed the wicks of this delivery. And the reason why I've done so is because I want you to start paying attention to what the bodies are telling to you. And the reason why it's important to begin paying attention to the bodies is because in the bodies, what we actually see is that the real story is being told. So when we pay attention to the same levels which I had outlined on the previous chart, where I had the wicks shown and the same ranges as I had shown them with the boxes and such, what you can see is that when we pay attention to what happened, you can see that the previous week's low level was right here. Do you see how we opened up exactly at the previous week's low and how the market then expanded towards the upside after we saw, of course, manipulation below it? Do you see how the bodies kept on closing inside the price range of this blue shaded box, that RWBC? And do you see how the market kept on expanding towards the upside and how every single array and level which I had outlined to you was being looked at and referred to as a support area? And I know that many of you come from a support and resistance background, and I don't want you to think that what I'm outlining to you is support or resistance in any shape or form, because it isn't. This is not as simple as, oh, there's a support level which gets reached, oh, we buy here, or there's a resistance level that gets reached and therefore we sell. No, that is pattern trading, and I'm not teaching you pattern trading. I'm teaching you a very specific logic based around the only two objective variables which exist. And those are time on the x-axis and price on the y-axis. Unless your trading methodology is based around those two variables, what you're doing is you're simply chasing price patterns for the sake of price patterns. And that is simply how everyone starts out in this industry. Why? Because it's a fact that the majority of traders simply trade based upon price patterns. And if you want to have a significant edge within these markets, you must do something that the majority of people don't do. So if you know that everyone is only paying attention to price and they're completely ignoring time, do you understand that time has to be looked at and that you need to start referring more to time, because it's time then price? What high do we pay attention to? What low do we pay attention to for our key liquidity pools? I just told you. Time cycle highs and lows are the only liquidity pools which matter. Those are the only reference points that IPTA is going to refer to based upon previous price action. And the reason why this is the case is because think about it. How would IPTA know what liquidity it's going to target today? What liquidity pool it's going to refer to today? The only way that IPTA can refer to very objective levels is by paying attention to the same time cycles all the time. And therefore, you need to start paying attention to time cycles more if you want to objectify your whole trading approach. Now, when we pay attention to this delivery, what you can see is that the market kept on expanding higher, retracing lower, expanding higher. These are all lower time frame market maker buy model opportunities which presented itself. Now, let us dive into the lower time frames because I'm going to be walking you through the market maker buy model which I took on Thursday and on Friday. And again, many students took exactly the same trades. And honestly, that to me is one of the most fulfilling feelings I've ever experienced. And the reason why is because I know how much of an impact this knowledge has made on my life and the lives of my loved ones. And to know that some of you are beginning to be able to do the same is just, it's amazing. So thank you very much for sharing it as well with me. You don't need to go out here and thank me or whatsoever, but I truly would appreciate it. Because the thing is, to know that I've made an impact on your journey, to know that I've just shed some light on certain things which were not clear to you yet, when it comes to when specific moves happen, from where they happen, where the market is going to draw towards, etc. It's just amazing, honestly. And when we pay attention to blending time and price, we're going to be looking at two market maker buy models. And we're going to be incorporating time as well. So if you did not watch my previous lecture on time, watch it. When we pay attention to this delivery, what you can see is that I bought near the low of day on NASDAQ, where you can see that I went long during the 945 to 1015 macro and I pyramided along the way. I took partials at this buy side liquidity pool and I also took partials at the previous 90-minute cycle high right here. When it comes to this delivery, what I would like to see is the following. You might be looking at this delivery and you might be thinking to yourself, how can you buy that low? How is it possible that you're able to buy that low? What if I told you that the way I'm able to buy this low is exactly by using the logic as I've taught it publicly for free here on my YouTube channel? I understand that you're probably hearing me say that and you're like, really? Yep, it's hidden in plain sight. And that's how I'm creating a puzzle within my YouTube channel, within all of the lectures I create. And for those of you that want to get to this level, dig. Because I've hidden certain things literally in plain sight. And you might be hearing me say that and you might be like, why don't you just share it? Why don't you just tell it? Why don't you just go out here and share with us every single thing which you know about these marks and how these high frequency trading algorithms operate? The reason why I can't do that is because there are entities watching. And secondly, what's important to note is that there is certain precision which can be achieved that shouldn't be known to the public. And the reason why it shouldn't be known to the public is because I'm not going to give my edge away. It's as simple as that. If too many people would be trading this way, I know that they're going to change the algorithms. And that's something which I simply can't allow for. And therefore, I'm hiding certain things in plain sight. And if you pay attention to the details, you'll be able to say, hey, that's interesting. What I would like to see is that we saw the market consolidate up here throughout the end of the first 90-minute cycle. This is the 7 to 8:30 90-minute cycle. Notice that at 8:30 AM we saw the market expand towards the downside and we then saw it go sideways once again. The function of this sideways delivery is to engineer buy-side liquidity resting above these highs. 9:30 opens up, regular trading hours begin. And what you can see is that the market initially has this small push higher before it gets repriced towards the downside. Notice that this bearish value gap, this CB forms. We see the market step into that bearish value gap multiple times right here. Notice that eventually, however, the market reprices lower and we see it reprice quickly towards the downside. Emphasis on quick. Notice that we see the market eventually form a swing low, and from here on we see the change in the state of delivery occur, where the market changes from sell program to buy program. So what IPTA is going to refer to is going to refer to buy-side liquidity pools which have been engineered throughout previous time cycles. So what you can see is that I've put boxes around the delivery based upon time, and I've outlined the high and low of that particular time cycle. So what you can see is that I have this bigger 90-minute cycle right here, and inside of that bigger 90-minute cycle there are 3 30-minute cycles. I can utilize these 3 30-minute cycles for key buy-side liquidity pools. And within those 30-minute cycles, there are also 3 10-minute cycles which I can be paying attention to. And that is how you can fractalize everything. Eventually, we see the market reprice above this bearish value gap right here. And we see the market expand towards the buy-side liquidity pool, which got engineered at 9:30. Notice that we see the market reprice above that high, initially rejected, and again reprice above that high. That is why I took a partial, and the reason why is because I recognized that we would likely distort time, meaning we would likely consolidate. And when it comes to anticipating consolidations, the moment that you anticipate a consolidation, in my opinion, it's always a good idea to take a partial, especially when there are warning signs present. And the reason why this is important is because if you think about it, right? If price would consolidate for a long period of time and you would have a lot of open profit, meaning profit which is floating, which hasn't been realized yet. If that is the case, yes, that's going to drain you. And if you're going to be looking at the charts then without having secured a profit for that particular day, you're going to be thinking to yourself, it has to run, it has to run. Oh, please run. You might even begin praying. And when you recognize that you begin praying or whatsoever, that's a sign, yes, take something off. And you might be listening to me right now, you might be saying, oh, that's weakness. That's a stupid thing to do. Why would you do that? Why would you take something off? For your own mental health, yes, for your own mental health as the operator of the protocol which you're creating for yourself, you need to make sure that you get to know yourself and that you get to recognize, hey, this is what puts a drainage on my energy levels. Once you recognize what those things are, your job is to make sure that you basically avoid draining your own energy levels. And I'm sure you're probably listening to me speak and you're like, damn, how do you know that whenever I'm in a consolidation that it feels draining, that you're like, can this just please move? Can the market just expand? That's exactly the function of that time distortion. It's exactly the human emotion which gets awakened. And once you become good at anticipating that, I'm of the opinion that taking a partial, especially when there are warning signs present, is always the way to go. But what I would like to see is that eventually the market reprices higher and we see it run towards that 7 to 8:30 buy-side liquidity pool. And that's again an area to take something off. Why? Because when you pay attention to the 90-minute cycles, what you can see is that based upon the scored boxes, 7 to 8:30 AM accumulated, 8:30 to 10 manipulated, and 10 to 11:30 distributed. AMD. Now let us zoom into the 15-second chart, because I know that some of you are probably like, okay, all fun and games, tell me how to end that low. Tell me how you're able to recognize the low is forming right now. And it's fun always for me to, to go on these small little rants here and there. And the reason why is because I'm filtering out the weak-minded. And the reason why I'm doing so is because I know how much work and effort it takes to get to this level. Because I had to go through it myself. I have spent years investigating these charts. I know what's required. And if you are willing to listen to me speak about this delivery, because I could go on and on and on about this delivery, about simply the price action which is in front of you, which is only a few hours of price action. There are so many little details in this price action that you can see and that you can start paying attention to. For example, pay attention to this candle. Why do you think I'm extending that to the right? Think back to what I started this lecture with. When a previous cycle high, in this case a 30-minute cycle high, gets taken out during a new 30-minute cycle. So after 10 o'clock, we see the market reprice above this previous 30-minute cycle high. That high should function as support and price if the underlying order flow is going to continue bullish. Do you see that I'm extending the full candle to the right of the previous cycle high? Do you see how the market keeps on going back and forth inside that candle? That is where time distortion is occurring. But when it comes to what I've just discussed, there are certain things which I want to reward the patient with. And I want to make sure that only those that are putting in a real effort and that are actually going into my lectures with the sole purpose of trying to learn exactly how I'm trading, I'm keeping the good stuff always at the end of these lectures. It's as simple as that. And that doesn't mean you should skip all the way towards the end of the lecture, of course, because I'm slowly building up each lecture. I'm structuring it in a way that from A to Z, I'm walking you through the whole thought process, because that's the reversal sequence and that's what your focus has to be on, becoming good at recognizing that. What you can see is that we've zoomed into the 15-second chart, and we're going to be paying attention mainly through the price action as it occurred inside that reversal. And for those of you that have been following me for quite some time now, you know that a few years ago I introduced the market structure shift pattern into the trading community. And what this market structure shift pattern is that it's the strongest algorithmic signature which occurs inside of every single market reversal. If you do not see it on the time frame that you're currently looking at, zoom into a lower time frame, because I promise inside of every single swing high and every single swing low formation, you are going to be seeing this fractal taking place. What I would like to see is that we see the market reprice towards the downside, and we see it reprice with a lot of speed. Notice how violent this move away from that 1 minute imbalance was. So the market retrace higher, and we see another push lower taking place. A bearish value gap gets created right here, and a retracement higher inside that occurs. Notice that the market reprices lower, and do you see how we have this small little inefficiency right here, this small little bearish value gap which gets created. Notice that this gets created as we take out sales liquidity resting below this low. And for those of you that want to really dive deep, hover over the time at which this low formed. And think back to time cycles. Little homework assignment for you. We see a retracement higher taking place, and notice that the market forms a high inside of this bearish value gap right here. Notice that we have one more push lower with this large down close candle, and notice that we then form this swing low and the market begins to reprice towards the upside. Notice that we take out the high which formed inside that bearish value gap, and when it comes to the market structure shift pattern, what this pattern looks like is that we look for a bearish value gap to be created, we look for a high to be established inside that bearish value gap, and as the market eventually displaces through that high after reaching our point of interest during our time of interest, we can be looking for a bullish value gap to get created inside of the run above that high which formed inside of that bearish value gap. This is what is the market structure shift pattern, the juicy MSS. What you can see is that there's this bullish value gap which gets created, market retraces into that, and do you see how IBDA refers back to that old low right here? Must be random, right? Institutional order flow entry deal takes place, and we see the market reprice towards the upside. Notice that every single bearish value gap which formed on the left side of the curve throughout this repricing lower is getting displaced through. Pay attention to this bearish value gap right here. As I see price displacing through these bearish value gaps, I know that I'm a side, and I know that I'm in sync with these high frequency trading algorithms which are now targeting buy side liquidity pools. They are now in a bullish price cycle. And because they are now in a bullish price cycle, every single retracement lower can be a potential pyramiding opportunity or potential entry opportunity if you aren't in yet. Notice that we see the market reprice above that large imbalance which formed right here, above that 1 minute bearish value gap, this blue box, and we see the market reprice towards a buy side liquidity pool resting above this high. Now, be honest with me. Let's say that you would take an entry right here, you would place your stop loss below this low, and you would just target this high. You don't aim for anything else. You just target the high which formed shortly after 9:30, original consolidation, smart money reversal, buy side of the curve. Let's say that you would take this low risk buy right here, this entry, with your stop below this low. I'm not too sure what the exact risk reward is, because I'm not a firm believer of risk to reward. I do not believe that risk to reward should be static, as you see a lot of traders nowadays aim for. And I'm not saying if you're doing that you're doing something wrong, because for some people it really works. But in my opinion, risk to reward should be dynamic. And the reason why is because what you can see is that this risk to reward is ridiculous. It's ridiculous to the normal trader. They would be looking at this setup and they would be thinking to themselves, wait a minute. We're speaking about a huge RR within literally, what is it? 10 minutes? Yep. 10 minutes of price action is in front of you from this low formation to the run towards this buy side liquidity pool. Think about that. Now, the issue which some of you are going to face is that you're going to be looking at me explaining this and you're going to be thinking to yourself, hey, if I can get such a high risk to reward within such a short period of time, you should be doing that all the time. That's how you're going to think. That's how you're going to frame it in your mind. However, what I will share with you right now is probably one of the most overlooked things within the whole trading industry, but I want you to pay close note because some of you are going to become very good at this stuff. Learn to be content with enough. Learn to be able to say, now the job is done. Now the job is finished and you're going to just go about your day to day. You're not living to trade. Your trading is purely going to fund your life, your lifestyle, how you want to go about your life, what hobbies you want to engage in, etc. If you think every single morning, hey, it's time to get out of the markets again, and from 9:30 a.m. to 4 p.m. you're going to be looking to trade, you're going to hold yourself back. And the reason why is because in order for you to frame these high probability trade setups, you must understand that they come like buses and they come based upon a time-based schedule. If the bus is there, you take a ride on the bus to your destination. Once the destination is reached, you don't say to yourself, you know what? This bus ride is so fun, let's just stay in it for a bit longer. And you go to a completely different place than what you had scheduled. No, what you say is, okay, destination reached, get out of the bus, walk away, wait for the next bus. But the thing is, don't think that the next bus should be the next 30-minute cycle or the next macro. No. Think in terms of, hey, if you made money throughout, for example, the morning session, no one is going to force you to look at the afternoon session. No one is going to tell you, you know what, you just made 10 grand throughout this run towards the upside, you should be doing something throughout the afternoon session as well. And anyone that goes out there and tells you exactly, hey, oh, you just made 10 grand and you should be doing more than that, they're absolutely fools. Understand that. You are not out here to try and live up to the expectations of your friends, of your family members, of people on social media. All that you're doing here is you're making ends meet and you're making sure that you're able to not have to work a job ever again. And that is the sole reason why I'm putting so much emphasis on this part of this lecture now. And it has nothing to do with order flow, but it is so important that you as the operator make sure that within your own mind, you're not creating negative thought processes for yourself, which are going to hold you back. Make sure that every single day that you wake up, that the mind is clear. If you know that your thoughts are all over the place and you know that you're worrying about the expectations or the opinions of other people, you're already losing. I'm of the opinion that you already win the trade before you even put it on. You might be like, how? Well, first of all, technicals need to be in point. You need to know exactly when and where these price swings are going to take place. I'm teaching you how to, literally during this lecture. But secondly, you need to make sure that your mind is in order. And what I mean by that is literally make sure that you're not basically dragging all that emotional baggage which you might have onto the charts. The moment that you open up those charts, you must be dead inside. You must be in sync with IBDA. The only thing which can be on your mind is literally, what is IBDA right now going to do? What is the next boss which is going to basically arrive? Once you arrive at the analysis of, okay, there's now an opportunity which is going to present itself. I see that we're manipulating lower to distribute higher. The moment that your drawing quality gets met, you think to yourself, job's finished. Surely you could leave runners within a higher time frame analysis, of course, where you anticipate, okay, we're going to continue running towards even higher prices. However, for that window of time, you've done it. You've literally done what you had to do. And if you take a crazy risk to reward home, and you start doing the math on that, and you start to think to yourself, wait a minute, this is what the good trader aims for every single month, but you just did that within such a short period of time. Oof. You do the math on that. I apologize for the rant, but there are certain things which I know are so important to discuss, and I really want you to take some time to reflect upon what I've just outlined, because some of you are literally holding yourselves back. Even if you're doing very well, you are bringing in negative emotional baggage, which is literally not required. Imagine how good you would be if you literally just would remove all of that stuff and just focus on alignment. That right there is the magical word. Aligning yourself with IBDA. Aligning yourself with these high frequency trading algorithms. And what did I state at the beginning of this lecture, what I will teach you? I will teach you how to align yourself with these high frequency trading algorithms, and this is how you do it. It's not only a technical thing, it's also a mental thing, because this battle gets won in your mind. Not to say that psychology is more important than technical, so I do not believe that. I believe that too many people put a lot of weight on psychology, but when you look at their technical approach, it's a freaking mess. And they say, oh, my psychology is bad, and this and that. No, your technical approach is a mess because you have no objectivity within your analysis. Once your protocol is objective, that is when you will realize, hey, there might be some fear and greed things which you might need to work upon when it comes to psychology, but the majority of the issues that the majority of traders face will take care of it themselves by simply objectifying your whole trading approach. So let us pay attention to blending time and price within a second example. Here we are on the delivery of Friday, and again, a market maker buy model presented itself. Do you see how similar this delivery is to the delivery which we just looked at from Thursday? From the 90-minute cycle star perspective, 7 to 8:30 consolidation. 8:30 opens up. What does it do? It drops lower. Notice that this bearish value gap gets created. We see the market reprice lower. Notice that 9 o'clock opens up, and we see again the market reprice lower, creating this bearish value gap. See the market goes sideways. Why is it going sideways? Well, the reason why it's going sideways is because we're about to open up for regular trading hours, 9:30 a.m. We see that inside this bearish value gap, there are multiple highs which formed. The moment I see those highs form inside that bearish value gap, I'm already training myself to anticipate, hey, you know what's likely going to happen? We're likely going to form a smart money reversal, and the moment that we see displacement above those highs, that is when we can say a change in state of delivery has occurred. Why? Because the PD arrays are literally signaling to me the underlying order flow is changing. And if you pay attention to those smaller time cycles, you will see how the time cycles are also showing to you that the underlying order flow is changing from bearish to bullish. Why? What you can see is that at 9:30 a.m. what happens is that the market reprices below this previous 30-minute cycle low, the low of this consolidation. Notice that we eventually see the market form a swing low, and we see it displace higher. The moment that the market trades back above that previous 30-minute cycle low, once the time is right. How do you know the time is right? I told that during my previous lecture, so if you did not watch that, I highly suggest you to watch it. And we see the market displays higher with this large green candle. Notice that the retracement lower occurs, and notice that the market is finding support at the 9:30 open. We wick below it, but notice that the bodies keep on closing at it. We see the market then reprice towards the upside, and notice that the market reprices through this highest high, which formed inside this bearish value gap. Notice that we form an imbalance right here. So what do you see? Again, market structure shift pattern. Are you beginning to get the light bulb moment? And I always highlight the market structure shift pattern with a light bulb. And the reason why is because for me personally, once I started to understand the importance of that particular price pattern, and it's not as if the price pattern itself is just, oh, therefore there's a trade. No, that's not what I'm saying. However, if the sequence is in play and the price pattern appears, that confirms the sequence as I was anticipating it. So it's a confirmation of a change in state of delivery where we're changing from sell to buy program. And this occurs across all different time frames. So as I see this bullish value gap form as the market is repricing heavily above this high and above this bearish fair value gap, the moment the market retraces into that fair value gap, that right there is a potential buying opportunity. Notice that the market trades into this high multiple times and into the price range of this bearish fair value gap, which we're extending to the right and we're treating as an inversion fair value gap. Why? Well, understand that if a premium rate gets displaced above, we can anticipate that the premium rate is going to function as support and price on the right side of the curve. So what you can see is that consolidation occurs right here. And why is the market consolidating? The reason why the market is consolidating is because, again, longs are being filled inside of this area. By who are longs getting filled, or who are being provided to go long? Higher frequency trading algorithms. So don't be scared of consolidation. Don't be scared of time distortion. And the reason why is because you need to understand what's going on behind the scenes. And once you start to recognize what ends time distortion as well, and you begin to recognize when that next expansion leg is going to take place, yeah, you see what I do. I pyramid. Why? Because I'm trading in sync with the high frequency trading algorithms. And because I know I'm in sync with them, because the market is literally telling me I'm in sync with them, what I'm doing is I'm pyramiding into my position. I'm adding and I'm adding and I'm adding and I'm trading my stop loss with each pyramid. And the reason why that's possible is because if I'm indeed right about this being a bullish price cycle, what will happen is that every single key level in the form of, for example, a previous cycle high will get displaced above, displaced above, displaced above, displaced above, until the market reaches its objective for that particular window of time. What is the anticipated draw liquidity for me? Well, to me, this 7 to 830 high was a very sweet draw liquidity. Why? Because we have been so bullish and we don't just randomly stop. The market just doesn't randomly turn around. There's always a change in the state of delivery which occurs at the end of a bearish reversal sequence. So what that means is that the same sequence which I'm applying to frame market maker buy model opportunities, I'm using to frame a swing high formation. And once I recognize a swing high, only then I step away and begin potentially looking for shorting opportunities. However, because those signs were not present right here, I feel this whole delivery lower, this whole leg lower. And do you see how slow it is? How much back and forth going is? How much small little candles there are, and then all of a sudden it begins to run lower, and then it begins to slow down again, and then it begins to go quicker again. If you think about it, it's kind of like music theory, isn't it? Something to think about, right? We see the market reprice into this CB right here, and the reason why I'm parsing right here is because we saw intermarket relationship suggesting that this would be a good partial. We saw the other indices already run this bias liquidity pool right here, and therefore to me this is an error to take something off. Notice that 10 o'clock opens, and what does 10 o'clock do? Distribute towards the upside. 7 to 8:30 accumulation, 8:30 to 10 manipulation. When does the manipulation in fact take place? After 9:30 am. And we see the market distribute higher throughout the 9:45 to 10:15 macro. When does the market complete this market maker buy model with the sell of the curve being right here? Smart money reversal and buy of the curve on the right here is at exactly 10 o'clock, at exactly the open of that new 90-minute cycle, which core function is to distribute. Beautiful, right? Now, when we pay attention to these examples, I want you to pay attention to details, because all that I'm doing is I'm referring to the same repeating logic again and again and again. Let us pay attention to bearish institutional order flow then. And we're going to be paying attention to the hourly chart. And what I've put in front of you is the delivery which occurred on NASDAQ throughout the beginning of April, when we had that huge crash on the markets. And I understand that you were probably looking at all of that delivery and you're like, what's going on? This doesn't make sense. Why is the market dumping this heavily? Why this, why that, etc. And the media was pushing this as well because it seemed like the whole world was going to come to an end, right? However, what I would like you to see here is that everything which I discussed during this lecture, which is purely based upon what's happening in the charts, was present right here. On Wednesday, throughout the afternoon session, Trump's liberation announcements came out, where he announced that he would put a lot of tariffs on a lot of different countries. And what I would like to see is that that news was utilized to reprice above this bias liquidity pool, and notes that a quick rejection occurred. We saw the market slam towards the downside and we saw this bearish value gap getting created. Notice that we saw the market reprice below the current weekly low up until that point, the Monday low. And notice that we saw the market retrace into that imbalance. Market goes sideways for a bit. What is it waiting for? It's waiting for a new day to open up. Why? Because we must engineer new sales liquidity. Where is sales liquidity being engineered? Below this low right here. Why? Expansion lower, retracement higher. Retail views this as a potential bottom. They think to themselves, hey, the low might be in. Where do we place a stop loss? Below this low right here. We see the market go sideways, and eventually we see the market displace away from this bearish value gap. Do you see how the market displays away from that bearish value gap? And we see this very tiny inefficiency getting created. When price is trading in a larger fair value gap, pay attention to whether or not a fair value gap forms as the market reprices away from it. Small little gem for those of you that are still watching this lecture all the way till now. We see the market retrace into that fair value gap and we see the market expand lower. Notice that a new bearish value gap gets created as the market displaces below this low. We see the market retrace into that bearish value gap and again expand towards the downside. Notice that a new bearish value gap gets created as the market displaces through this low, which have this retracement higher. Notice that the market goes sideways inside of that bearish value gap for a bit, and we see the market expand towards the downside once again. Notice that the market creates this huge inefficiency, retracement higher occurs, and the market slams towards the downside once again. So what I would like to see is that what I'm paying attention to is first of all, through what lows are we repricing and how is the market responding to these lows? How is IPDA referring to these lows? If these lows are going to function as resistance price, and pay attention to the full price range of the low. So, for example, this downward candle can be extended all the way to the right from low to high. What you will see is that the previous daily low 2 days ago is functioning as resistance price. Because it's functioning as resistance price, that's signaling to you that the underlying order flow remains bearish. This can be fractalized all the way down to, for example, let's say a previous session low, a previous 90-minute cycle low, a previous 30-minute cycle low, a previous 10-minute cycle low, even a previous 3-minute cycle low. So what you can see is that the markets are fractal because what's happening on the bigger time cycles is also happening on the smaller time cycles. Next to that, what I'm paying attention to is where are these arrays forming? When I recognize where these arrays are forming and I can very clearly see, hey, these arrays are displacing through these time cycle lows. So I see these bearish value gaps form. It's showing to me there's an urgency for the market to reprice lower. So I understand that you might have watched this lecture all the way to the end and you might be thinking to yourself, damn, this was a lot. And I must admit, I discussed a lot and I discussed it at a pretty quick pace. However, once you begin to understand the logic which I'm outlining to you, which is objective, which is literally the same every single week, all I'm doing every single week is the same process. Once you start to recognize that and you start to recognize, hey, there's a certain order in which I'm explaining everything from, okay, step 1, step 2, step 3, step 4, etc. I promise that once that light bulb moment takes place and you begin to see how all these different puzzle pieces blend together in the bigger puzzle, you will never, ever, ever feel like you need anything else again. Why? Because you know exactly how these high frequency trading algorithms are coded to reprice. And that right there is one of the most beautiful feelings to experience. And I truly hope that if you have watched this lecture all the way to the end, that you've gotten great insights from it. I've done my best to explain everything as simple as possible. The reason why all of this stuff works is very advanced. However, to visually see it within the charts is pretty straightforward. All that I ask you to do is to go into your own charts now and investigate that what I've outlined to you. And if you do find success based on the concept which I've outlined today, all I ask of you is a simple thank you. You can reach out to me on Twitter, you can send me a message through Telegram, you can leave a comment or you can send me an email, whatever. I check all of it and I would really appreciate it to just know where you're at in your journey, even if you're struggling. And the reason why is because I want to make sure that I'm able to help you as best as possible. And to know that I'm doing my best each day to help you move forward is one of the most fulfilling feelings to have. So again, don't be afraid to reach out. And I truly hope that this lecture has shed some light on these very advanced concepts. Now, moving forward, I want to wish you a lot of good luck in your studies. Don't give up if things get hard, because they will get hard. You're going to be faced with adversities. You're going to be going through periods in which you just don't seem to be able to bring up the energy to sit in front of the charts, to go out there on those late nights and open up the charts and study. But it's exactly in those moments that you need to submit to time and have the courage to push through those negative emotions of, hey, you know that the reward is going to be worth it. And that is something which you need to keep in mind. Establish where you want to work towards, establish the vision, because once that vision is clear, all that there's to do is for you just to keep on moving forward, keep on raising the bar again and again and again. And as you start crushing those goals and you begin achieving them, you begin to realize that your goals were never big enough. And the reason why is because society has taught us to think small. Once you start thinking big and you start to see what's possible out there in this world, I promise that your energy is going to change, the frequency at which you operate is going to change, and everything else is going to connect. You're going to be looking back at all of the different parts of your journey and you're going to be grateful for each one of them, because you understand that everything occurred at exactly the right moment in time, exactly the right sequence of events as well. Because once you start understanding these technicals in depth and you start blending it with real life, you begin to see how similar real life is to how these marks are programmed. Good luck in your studies, and I look forward to speaking to you during the next one. Let me know if you would like to see more lectures in this style. Be safe.